Welcome to today's team training. We're going to start another series of our business component model breakdown. And this is going to be all about the Money Max account, which is the technology that we use to guide all of our education and our strategy and provide execution so that our clients can get this done with precision and convenience. So today we'll have MMA basics. Next week, we'll take a little break to prepare for 2025 with the success strategy and the blueprint for the new year. Then come back, circle back around, do MMA intermediate and MMA advanced. We just finished a building and recruiting component series, and that's really good for understanding, how to build agencies, how to manage agencies, how to recruit people into your agencies that are worth recruiting in there. All of those are unlisted in the YouTube channel, which means you have to have the link for them. And I also have those kind of paired up in different areas in the Facebook group. So like I mentioned, this week we're going to start a new series on the Money Max account, which is, like I said, kind of like the financial GPS, the technology that allows us as financial coaches, advisors, to be able to create something that is workable and doable for our client base. There's two parts to the Money Max account. There's a debt elimination component and a wealth creation component. You can use those independently of each other, or they can be combined for the full strategy. So today, what I want to do is just kind of break down some basics of the Money Max account, how we talk about it, what's important to know, and in this environment that we're in right now, why what we do is more important than ever. The American dream, people are starting to realize and wake up. It's not about having a garage or an attic or a house full of a bunch of stuff. It's about having opportunities. It's about having, freedoms. It's about having choices. And what does debt do? It eliminates all the opportunities, choices, and freedoms. So when you look at debt and what it does to a particular individual or household in this country, it's absolutely devastating. So we have timely, needed, valuable information. We have technology that will do all the hard work for us. What we need to do is get behind the mission of relieving people of this debt obligation, which then frees up opportunity, choices, and freedom. What do people want? Well, they want to take their freedom back, especially if they feel like they are working just to pay the bills, service the debt, and it's just a cycle and an endless kind of hamster wheel that they're on. They also hopefully want to maximize their cash flow, pay off their debt in record time, and build significant cash reserves. If you learn to give people what they want, help them solve their problems, bring solutions to the table, you will have a very successful business if the product is legitimate and serves a big need, which ours definitely does. So when you're talking to people, it's not about understanding the most about the Money Max account and what it can do. It's about understanding how to simplify that message into the wow of the end destination, helping people understand what's possible and then backfilling all the rest of the how. People leak money, right? So what we do and what we teach is how to reverse the cycle, stop the financial drains, and turn the tables from the banks and the financial industry sitting at the head of the table to themselves, which it should be. What they do with those years of canceled debt payments is up to them. If they want a vacation, if they need to build retirement accounts, start their business, invest in real estate, those are unique and specific to the client side. Our job remains the same. We help identify who we can really help out, introduce them to the technology, introduce them to our coaching, and combine the two together to ensure their success. Most people have no idea what a mortgage really is. And so what they need to understand, and part of our job on the forefront, is to let them know, hey, that mortgage that you're holding that you think you're just going to be paying on forever, a mortgage-free future is a lot closer than you imagine. So once again, the wow of the end destination, how to pay off the home in as little as 5 to 7 years, how to do that in as little as 10 minutes, is the message that we really should be out there relaying to the other side. And the ability to do that and convert debt to wealth. People have too much debt, too little wealth. This takes care of both problems, independently of each other or simultaneously. Once again, we've created a business model that all starts with education because we know that leads to the right people making the right decisions, becoming our clients. When you look at a financial GPS and compare that to like a physical GPS that we use, and we kind of help people understand the ludicrousy of what they're doing in their financial plans when you take them outside the financial conversation. No one ever looks for the longest and most difficult route when taking a road trip. No one has ever done that, right? You look for the shortest, most efficient routes. And then in that route, if you can chop more time off with additional instructions or advice from the GPS, you do that. So why does our lender have the mortgage and other debt obligations on the longest trip? Well, it's to keep us confused, make the most money. What we would need to realize is destination A, destination B, whether they be physical locations or monetary locations, there's different routes, and there are shorter routes that will give you control. Most people have no idea the exact day, month, and year they'll be debt free. The fact is, most people don't. They don't have any idea. But if they did, think about how that would affect their life in terms of motivation, inspiration, planning, confidence, peace of mind, control, all of these things. What would your life look like debt free? So getting out of debt on your own is a lot like going on a road trip without the GPS. And that's how you guys really need to talk to people. These are journeys. And your journey can be very, very long, or it can be a lot shorter depending on the routes you take. You know your destination, but if you make a wrong turn, it's hard to see how it affects the ETA. What you want to do is you want to get rid of your debt as soon as possible between everything, the mortgage, car loans, student loans. It's very difficult to tell when you'll reach your destination. And a little purchase along the way can have a big impact on the travel time. So it's a financial GPS taking everything you owe into consideration and giving you the fastest route. Think about doing some of this on your own. Think about the spreadsheets and the time and the energy, the resources some people put into this to get not even close to the results the MMA can get somebody. Their daily choices have long-term consequences. And it's really about helping people understand that there are going to be choices. And those choices, regardless if you're talking about money, nutrition, physical health, mental health, whatever it might be, if you make the wrong choices over long periods of time, they're going to have disastrous consequences and risk along the way. The MMA is going to be the way to control your finances. It's up-to-date visual representation of everything with your financial health. So it's not just about debt elimination. It's about how to stay on track to achieve your financial goals, once again, in a fraction of the time. That's the key. Time and money are the two biggest factors in the wealth equation. If we can free those up from the debt servicing and move those to the wealth side, it has incredible positive ripple effects. This program and this company began with one goal in mind: to help homeowners achieve financial freedom in less time with saving more money. That's it, guys. That's what we do. Most homeowners think that the only option is the standard, the 15-year, the 30-year mortgage. Lenders run the show. There's not much that we can do about it. However, the guys that built this program and this company, we disagree. The bank shouldn't control your life for decades, and that's why we created a system that can help you pay your mortgage off and all your debts in as little as 7 to 10 years, maybe more, maybe less. Really depends on the reports. But that's bringing a new meaning to financial freedom. That's what we're all about: creating freedom, creating control, creating peace of mind. And we want you to be part of it in terms of helping others understand and gain control. You know, the numbers don't lie for the Money Max account. Over $2 billion, not in canceled interest, but principal debt eliminated. And when you look at rerouting money, canceling interest, canceling the bank's profit, and rerouting that back to our clients as seed money for whatever they need to do: build a business, build their retirement, invest in real estate, invest in stocks. It's about the transfer or the conversion of debt to wealth. The Money Max provides a faster way. I remember in college one time, we're in college, always looking to save money, right? So I took from Las Vegas to Charlotte, North Carolina. I think it was like 3 or 4 connecting flights. It was a disaster. I will never do that again. The first thing I look for now is the direct flight from A to B where I want to go. Money Max account provides a much faster, more efficient route to getting to your end financial destinations than the bank can ever give you. Bank's got you on so many connecting flights that you're never going to reach your destination. And when you compare a direct flight versus connecting flights, you start to understand the financial game. The only reason they're doing that is to line their pockets with your interest payments. You become a foot soldier for the bank. We want to work as the bank, not for the banks. We want to create that straight line. Remember, the shortest distance between 2 points is a straight line. That's a linear equation. That's what this program does. And what we tell people over and over and over again, this is not magic. Nobody's waving a wand. This is just math. And when you have 4.5 million lines of code put together to help you create that linear equation, the system strategically reduces the balances that accrue interest, saving you time and money that would be spent making new interest payments. So every time you do that, whether you are creating a new purchase, creating a new debt, creating new income, you can put it into your system and understand what's really happening. And that's going to create data-driven decisions. And then on data-driven decisions based upon a consistent basis over time, that's going to get them what they're looking for. So the big picture is the more somebody knows about the options they have, the greater chance they'll have saving hundreds of thousands of dollars. Remember, guys, this is not chump change. This is a lot of money in interest over the life of their debt. What is interest? It's just the bank's profit, right? So it's the cost of using the bank's money, what the bank is actually charging you to use their money. And when you look at the ways that they create what we call mirage language, which is putting stuff in front of you that you don't really understand that's going to benefit them, but on the forefront of the surface, it looks okay to you. That's what they're experts at. So we need to understand the bank's profit is there from our side and our perspective to be eliminated and rerouted back to our clients. On the interest, power of compound interest. Those that don't understand it are doomed to pay it. Those who do are destined to earn it. So the process of converting debt to wealth is also the process of a O versus grow plan, and also earning interest instead of paying interest. So the conversion of debt to wealth comes with a lot of byproducts and a lot of ripple effects that have, other positive impacts on other building blocks in the financial plan. So our mission statement is just to empower individuals to achieve financial freedom through education and proven financial solutions. That's it. Empowering people to have a better life through understanding and creating better financial solutions. Skylar and John created this program. They were both victims of foreclosure in their childhood. And anything in your childhood has a lasting impact on you. So they didn't want people to go through that. They became aware of the debt epidemic by owning a mortgage company. They saw their clients returning every 36 to 48 months to refinance, to buy what? Stuff they don't need. So they kept spending. They kept coming back to refinance. What does that mean? The debt gets more and more and more, and over time, and there's no way to create a solution if you're going back to the problem and returning there every 36 to 48 months. This is somebody's budget, and this is just an overview. There's different things that we have going on in our budget. What happens inside that budget is there are percentages of our income and our cash flow that go to each one of these pieces of pie. What happens as interest rates start to rise? Now, we saw something that caught a lot of people off guard recently. We saw the Federal Reserve lower interest rates by 50 basis points, and we saw real interest rates rise, which means the cost of borrowing went up. Caught a lot of people off guard. Federal Reserve rate and real interest rates are not the same. So as interest rates start to rise, what does that mean? That means on debt servicing that has variable aspects to it, the piece of the pie, meaning the piece of your income that goes to that, gets bigger and bigger and bigger, and it starts to squeeze the entire budget. Why is that? Because as interest rates rise, if we have to go out and refinance or we go out and get a brand new mortgage, call it mortgage mayhem. Because if we look at a $200,000 loan at 6%, which is a typical example that we use, look at that $1,199.10 payment and understand in month one of that amortization schedule, $1,000 goes to interest. That's 83% of your payment gone. Don't worry, in month two, you're going to get a dollar flip-flop. $1 more goes to principal, $1 less goes to interest. Year one, what's happening? Well, we're making mortgage payments, but we're basically just spinning our wheels. So what we want to see is 60 months or 5 years into this mortgage at $200K at 6%, what's really happening with our money? Well, we've done our obligation. We paid $72,000 in mortgage payments. However, out of the 72 grand, only less than 14,000 actually went to build equity, which means out of the 72,000 we paid in mortgage payments over the first 60 months or 5 years, $58,000 went to interest. Does that seem like it's a reasonable contract to you guys? It's definitely not. And then if you jump into year 21, this will actually be the halfway mark. So typically 30 years, last 9 years or so is going to be most of the principal. What happens in the first few years of the mortgage? People move, people refinance, they reset this thing over long periods of time. They'll become renters in their own property. And that's not a path that we want to be on. What also happens as interest rates rise to credit cards? Well, if you have credit cards, you're seeing those interest rates rise. So if interest rates rise and we have revolving balances, what does that mean? It means more of a minimum payment, correct? And the true cost of a credit card, if we're only juggling minimums or paying little to nothing past the minimum, we're on the hook for a long, long, long time. So as interest rates rise, minimums rise, we're going to be on the hook even longer if we don't create a plan of action to get out of that debt. And then what about all these student loans on deferment that are coming due that haven't been canceled? Once again, as we have new things that maybe on deferment re-entering into the budget causes havoc, or as those interest rates start to rise, it becomes even more and more and more of a burden. Why is this? Because of the loan amortization schedules. They're designed to do two things: make the banks rich, make us poor. So people have to understand not necessarily the intricacies of a loan amortization schedule, but just that it's designed to rip them off. Once they do, we can help them with the insight that helps them understand more and more and more about the power of the Money Max account. What is the insight? Well, it comes from really understanding the difference between interest rates and interest percentages, or tips, or total interest percentage, volume of interest, whatever it is that you want to call it. When you look at 300K at 4%, which is below market right now, and you look across year 1, year 5, year 10, year 15, we start at over 69% of the payment going to interest. And then throughout the course of 5, 10, 15 years, we eventually get down to under 50%. Guys, this is an uphill battle. And if you're just going to take once again, the bank's path, which is the longest route, most toxic and costly plan, it's going to rob us of the opportunity to build retirement accounts, to have seed money for assets that could have been there if we would have taken a shorter route. So that's the debt trap. And that's what we help people relieve themselves from, because the shocking reality of the bank stranglehold on people's net income becomes very apparent. We start to run those savings reports, and a percentage of their income goes to servicing debt, but then a percentage of their income that's pretty high goes just to pay the interest on that debt. So we're here to help. And that's really where the Money Max account comes in, because there's a lot of money programs, money software, money personalities out there. Nothing does as good of a job as the Money Max account. Precision and convenience, that's what it's offering. And once again, as interest rates over time rise over the long term, what's that going to do to revolving debt and debt obligations, and maybe what we call hills of debt is going to turn into a mountain or a tsunami of debt. And that over time is going to have a crushing impact on not just our financial well-being, but other parts of the well-being pie as well. If you're digging yourself into a hole, you cannot dig yourself out of a hole by continuing to dig. So people have to understand that what you're doing up to this point has gotten you to where you are now. If you're going to continue to dig that hole, don't need us. If you want to continue to steer that, ship into an iceberg, don't need us. What we do is help people get out of the hole, avoid the iceberg, and create, like I said, a financial end outcome that they're happy about with a legitimate path to actually get there. They've got to make a choice. Or are they going to get rid of this debt, or are they going to sacrifice their savings and retirement over time to service the debt? So who are they more interested in, the bank's well-being or their well-being? Because if it's their well-being, they need to create a plan of action that puts them, once again, at the head of the table. So what does somebody do? Well, there's choices always in life, but what somebody wants to do, and what we continue to preach, is don't dwell in your problems. Start to dwell in the solutions. And once you do that, you can learn exposed financial strategies the banking industry has been using for years to quickly eliminate their debt and build wealth. So don't do what the bank tells you to do. Just do what the bank does. And then our technology and the 4.5 million lines of code takes all these financial strategies and creates, linear equations for you. So getting rid of the mortgage, slashing years off the mortgage payment, using high-tech mathematically driven program to do the work, because left to our own devices, it's not going to get done. That allows us the interest reduction solution. What does that really mean? You pay the least amount of interest possible. Do you want to pay the most interest or the least interest? Obviously, these are questions that our clients should be able to answer pretty quickly. Create the shortest payback time possible. That creates total debt freedom if that's their goal. O versus grow. We talked about that. Earn interest instead of paying interest. That's a simple conversion, right? And then maximize those retirement savings. Those canceled debt payments over time can build a significant amount of retirement savings or asset accumulation. It's goals versus habits. Remember, those goals somebody have are very lofty. Habits are bite-sized. And when you can create habits inside a technology program that does most of the work, it's going to allow you to get ahead of other people who aren't using technology, who aren't using linear equations, who are just following the bank's plan. Gone are the days or wondering what's the best route. 40 years ago, to get this done, you need a room full of advisors. Now you just need a program, the Money Max account. You simply decide where you want to go financially, just like you decide in your car where you want to go as the end destination. And the Money Max account guides you the quickest, most effective path to get there. Online education, easy planning, 24/7 service. That's what we offer, guys, to help people on their financial plan with free coaching, backed by, a lot of things, money back guarantee, but also national recognition. Remember, and let your potential clients know this. Hey, we're not asking you to beta test a program. This program has been introduced and accepted on a national basis, and it's received national recognition from Ernst & Young in 2008 when John and Skylar won for the Money Max account the 2008 award for the financial services division. So what do we offer people? A blueprint for success. What do they do with it? That's up to them. We're going to give them the framework and the blueprint for success to bank like a bank with the push of a button, to put every dollar to work for you instead of the bank, and to see the long-term impact of every purchase in real time. One of the difference between 2008, when they were nominated for and they won the Ernst & Young Entrepreneur of the Year, in this time period, is the offset account is much more, there's many more options. It used to only be a home equity line of credit. So if somebody has a home equity line of credit, if they have personal lines of credit, commercial lines, secure lines, credit cards, any of these things, yes, we would need to know for the most accurate report possible. However, they don't have any of these things. Guess what? Got plenty of clients that work with just checking savings. They're getting tremendous results. So yes, if people have these other variables, yes, we want to know. But if they don't, it's not going to be a knockout. All we're doing is teaching people and empowering people for financial well-being. And like we talked about, financial planning over X period of time, with putting them at the head of the table versus the bank, creates the end outcome instead of drifting. What is the end outcome? Well, it creates a new you. What does the new you look like? More choices, more freedom, more control, more peace of mind. And when you look at the wellness pie that we talked about a little bit earlier, and you've got the financial slice locked in with a lot of control and peace of mind, it's going to give you freedoms and choices that blend over into the rest of this. Money is a tool. It can buy us freedoms, has options. It's also going to create time freedom. And that time freedom over time can be invested into other areas of our wellness. This is about a simple and proven process to convert debt to wealth. Does somebody want to do that? Then they're talking to the right people in the right company. And what you want to learn to do is talk about that process, talk about that end destination, not in terms of what it's going to cost, but what's the value? What's it actually worth to somebody to get this stuff accomplished? Because if it's worth what it should be worth to them, then the free education, that's the next call to action, should be very easy to get people in line for. And we'll finish up today on helping you guys understand that the Money Max account is not there to just help people survive these economic times. It's there to help them thrive. And once you get past the mission of what we're doing, converting debt to wealth, teaching people how to thrive, creating financial end destinations they're excited about, with a technology is going to guide them there and coaches that make sure they're going to stay consistent, because this is a grand slam for you, your clients, your partners, the company, everybody involved. This is a win-win-win if you understand what we're doing, understand the power of it, and how to reach the right people. Next week, you guys will get like I said, a little break to do the success strategies and the blueprint for 2025. In the following weeks after that, we'll come back to do the MMA Intermediate, which is going to go in the program, showing you guys, what we teach our clients, as well as in the advanced MMA Pro. What's that all about? Creating arbitrage, offset, and wealth creation simultaneously.